Good morning, everybody, or good afternoon, or good evening, depending on where you are. We know our snowbirds are scattered all over the country. I'm in Maui. Today's guest, which is Trent Robinson, is in Saskatoon. So we'll find out more about Trent and his firm in a second here. And like I say, we have snowbirds spread all over the United States. We're all in different time zones. So right now, it's still morning. It's good afternoon in Saskatoon, and of course, it's almost good evening in Toronto, where our producer Mike is. So anyhow, today's podcast, we're going to be talking about a lot of the Canadians that go down south for work. So we're not talking about the snowbirds that just go down there and have a little bit of fun and enjoy the sun and golf and all these other things. We're talking about Canadians that actually move down to the United States, and we're going to be discussing their RSPs and what they can and can't do with it. So before we get into some really interesting questions, I want to just introduce Trent Robinson to the show. His firm is in Saskatoon. And Trent, tell us more about your firm and exactly what you specialize in.
Sure. Thanks a lot, Gerry. So as he said, my name's Trent Robinson. I'm a partner with the firm Buckberger Baerg Partners. We are an accounting firm based that is purely local and based out of Saskatoon. Our firm is a full-service accounting firm, do everything from audits to very detailed tax planning. My role within the firm is I head up our international tax practice, and as a part of that, I am responsible for the firm's U.S. tax returns. And
Okay.
I do tons of Canadian tax planning and U.S. tax planning and combination of the two.
Okay, so you sound like my life, where when I was just working on the Canadian side, I was this friendly person that could go out there and spend a lot of time with people, but now we have to deal with both sides of the tax. We're hard to find, and we don't have a lot of space left in our head when it comes to interacting with everybody out there. But I'm only speaking for myself. I'm just going to assume that everybody else is in cross-border space is the same, so I don't want to speak for Trent. So Trent, I'll ask you some questions, and then I'll ask you some other case studies that we're working on. As mentioned, I'm very fortunate. I get to spend a lot of time in Maui, and we have a lot of Canadians. I mean, a lot of Americans that worked in Canada and have now retired in states like Maui, and they've got these large RSPs, and we just got involved later in the process, and they weren't able to crystallize those RSPs, so now they've got to deal with state tax. So that's a great segue into the first part of our questions. Is you have this Canadian person who has all these RSPs, and they move to the United States. What can they do with their RSPs, and are they taxed even if they don't
So
take them out?
so that's such a great question, and the taxation of these things has actually evolved over the past 10 years or exactly how to deal with them has evolved over the past 10 years. But the short the uh, the shortest way I can answer that question is that generally RRSPs and all the other similar types of account LIRAs, RPPs, all of those Canadian protected retirement plans, not TFSAs, um, are generally going to be tax-free while they are continue to be within that Canadian plan. But generally, when they come out of that kind of Canadian plan, they are going to be subject to tax in one form or another.
And I guess it also depends on when you take money out, it depends on what state you're in, because in this situation like Maui, we find that even if they don't take money out, it might not be taxed on the federal level, but it
Right.
is taxed on the state level. So how do you manage
Yes.
that? And how do you, when you're doing these tax returns for these people that are living up in Maui, how do they, if they're not taking that money out, what kind of reporting would they have from the investment firm?
Oh
on the.
yes, that is that's a fantastic point. Is the fact that not all states it is only because of the Canada-US tax treaty that they don't have a tax issue on the federal return. But some states, but not all states, will actually respect the tax treaty. But like and so in the situations where like a person is residing in a state that doesn't respect the treaty, it's very cumbersome because they don't receive any of the normal reporting that makes T1 completing T1s doable on a more mass basis. So like and similar so normally, the things that make tax returns doable for accountants is the fact that we receive 1099s the US side or T5s, T3s on Canadian side, and those government forms allow tax preparers to have confidence as to what the correct amount of investment income and its characterization for the returns. But the problem is that when you are dealing with a T or an RRSP, you're typically not going to get any kind of reporting forms from the financial institution, and so that that leaves it with a rather large issue in that the accounts effectively need to be manually book kept. Is like what the option is, or in some cases we are able to get some reporting from the financial institutions, but that's typically generated like on an ad hoc basis, and if the person doesn't have like a personal advisor, it typically isn't possible. So if they're invested in a discount brokerage, have an RSP with a discount brokerage, basically good luck. You'll basically need to be bookkeeping the RSP accounts manually.
So what happens if these clients that are Canadians and they do live in these states that don't recognize the treaty and they have state tax? I mean, a lot of these Canadians aren't aware that they have to report the interest, the capital gains, and the dividends. What can they do? Or what happens if they're not aware of it? I mean, how do they get caught? And is there a penalty for not declaring that income?
Well, I mean, the whole discussion about like how or if or when people will be caught is one that is like it's really difficult for me to be discussing because I mean like practically it might be somewhat difficult, but like the thing is that even if that statement is completely true right this second, which it might not be, um all it takes is for them to develop a process for running through that kind of thing and gathering that kind of information anytime in the future, and then they could create kind of a mass audit program in order to try and catch those kinds of things. So that kind of thing is talking about probability of audit is an inherently challenging topic to discuss with any level of confidence.
And I guess where it does come up is that as an American, they have the F bar and they have to report that they have these assets outside of the country. So I guess that's the big thing that,
Hmm.
and like I say, we're always 100% compliant, and by no means would we ever want to educate people on saying, don't worry about it. But once again, you have a responsibility to file your F bar. If you live in the United States, all that stuff has to be reported. So I can see how this comes up, and people just aren't aware of it. So now, so let's say, for example, would that be the same case with, I don't believe locked in RSPs have to be reported because it was a pension scheme that was set up in the first place. So those assets would not have to be taxed or reported. Did I
Yeah, and
stump? Did
so
I stump the guest?
no. So like the trying to distinguish exactly what is and is not exactly covered is such a is a really kind of delicate topic. But generally, I believe that from my current understanding or the way I interpret the regulations, and just to be clear, like there isn't a perfect source of this kind of thing. But the way I interpret the regulations is that if the money is currently within an RPP, so actually a pension plan, then it is not subject to FBAR reporting, but it still is subject to reporting on the 8938. But if it is in an RRSP, LIRA, or any other kind of account that is not currently tied to an employer, that it is reportable on the FBAR and 8938.
Okay, so we know that these in some of these states where there is state tax, the strategy when a Canadian comes to you and says, "Listen, I'm moving down to the States. I've got this large RRSP." You would have a checklist to say, "Oh, by the way, your RRSPs are taxable." Do you recommend that they crystallize the RSPs, meaning that you get the cost base down to zero? At least that way, moving forward, it'd be easier to manage.
Um, so I mean the what I would say is that kind of thing really depends upon everything in that person's situation. Um, I would say that like yeah, if there's the state tax issues, that is absolutely a huge that would be a huge thing, because the compliance cost mixed with the tax cost probably make it prohibitive to maintain the RSP. But if you're in a state that doesn't have those kinds of state income tax consequences as a result of holding the RSP, um, I there it actually really depends on it depends more so on the size of the RSP is actually the one thing that makes a really big factor. In fact, I just had a very close personal university friend who went to school, lived in Canada, was born and raised in Canada, and now is living in the States and has like a $20,000 RRSP that is just kind of stuck there, and was just informed by their financial institution after like finally letting them know that they were living in the States, um, that they no longer wanted to deal with them. And so then so then it was like a really bit of a challenging thing. And I mean, ultimately, or if the amounts are very small, it might just make sense to collapse them. If you don't, but if you're dealing with a situation where the amount is considerably larger, then or is large enough that like that it still is worthwhile having an account, and like the tax cost of moving it out is a material thing. Um, is a very material thing that you could consider trying to move it to a different brokerage or financial institution that is able to manage that kind of an account.
You know, we are seeing this trend where you had these American professors living up in Canada. They have these large RSPs. When I'm talking large, I'm talking about $1.5 million. The cost base on that RSP was probably around 500,000. I'm repeating myself because I brought
Mhm.
this up on a few other podcasts as well. But really, I guess what we should have done is, you know, you get called in, and this is the importance of having people like Trent on our podcast. It's so important that you have a great cross-border team. If you're coming up to Canada or you're heading down south, you have the cross-border accountant that really knows all the rules. You have the advising team that is cross-border, both licensed in the United States and Canada. Excuse me. And of course, your immigration lawyer. And you want these people communicating, because we can't really talk about general stuff. Everything is so complex. And as Trent mentioned, there's so many, some states don't have state tax. They recognize the treaty between Canada and the United States. And then there's others, those beautiful states like California and Hawaii, that they don't recognize the treaty and you have to pay your state tax. So you really want to make sure that you align yourself with the proper professionals
Mhm.
and get through this complex. Because I'll tell you something, we're learning every day, and that's why we have people like Trent to really educate us as advisors, because we're not accountants, we're not immigration lawyers, so don't try and pretend you are. So the other question I'm going to bring up right now is that you have these people that are living in Canada, commuting and working in United States. And
Mhm.
that's becoming more and more common. I mean, are they, I guess it really comes down to that they're, in theory, um, if they're working in the United States, physically working in the United States, are they seen as, can they contribute to IRAs and Roths and these other pension plans? Can they do that?
There are very detailed and very specific rules set out in the Canada-US tax treaty that are specifically designed to um, deal with this kind of situation. And I think the response, what I would say is that it is this is the kind of thing where I strongly advise any person to get individualized advice, because there are about like 6 or 7 criteria that must be satisfied in order for those treaty provisions to actually work. And then on top of that, like, are you then falling into a state tax trap or something along those lines? And so, um, I strongly advise anyone who is in that situation to get individualized professional advice about their situation, because it is so difficult to answer a question in general. But like, given to me in general, yeah, they can participate in 401ks, but like that's such a dangerous answer because it may not their situation might not actually meet all of the specific requirements.
Yeah. And like you say, we are seeing a lot of this. We have clients that live up in the Okanagan, and they're traveling to and from United States until they get that Canadian contract in place where they're going to be working for their employer in Canada remotely. So, and once again, we're heavily involved with the accounting firm. We're communicating back and forth with the client and just making sure that that they can avoid any kind of traps, double taxation, trying to contribute to an RSP and not getting the deduction. And that's a great segue to our next question is, if you make a contribution to an RSP, and that was one of the things that you brought up in here, and I'll read this note that you received. It says, for U.S. tax purposes, RSPs, if you contribute to an RSP on the Canadian side, how does that affect your U.S. income? Oh, there's another one of
Um,
those questions you're going to have to shake your
well,
head at.
Well, I mean, like, so for U.S. federal tax purposes, when you contribute to an RRSP, that has no effect on your income. In other words, um, like you still are taxable on the employment income that, uh, but you don't get the RRSP deduction for U.S. tax purposes.
Yeah, so I
Um,
think, sorry to
but
interrupt you.
then later on, when you take some money out of the RRSP, um, not all of the withdrawal is taxable. So theoretically, the IRS isn't charging double tax there, but there there's oftentimes a large amount of time between when you lose the deduction and when you don't have the income inclusion, and then you're not lining up Canadian and U.S. taxes very well.
Yeah, one of the things that you put on here, um, it says under the treaty there is a deduction available for contributions to an RPP,
Yes.
required pension plan, but are subject to U.S. contribution maximums. So you're talking about the IRAs and Roth contributions and
Yeah, so this is just getting into in a point in that normally most people in Canada struggle to understand, struggle to see what the differences are between RPPs, especially defined contribution RPPs and RRSPs, because they really look like the same thing when analyzed when looked at from a Canadian tax perspective. Money, when you put money into them, you get a deduction in Canada. When you take money out, they're taxable. And while money is inside of there, there is no tax. From a purely Canadian point of view. Um, but what the interesting thing is that the IRS views RRSPs and RIFs very, very differently from RPPs, and they see RPPs as the equivalent of a 401 as a 401k, um, and are generally willing to actually allow you when an employee makes a contribution into an RPP, they will actually allow you to get a deduction from U.S. taxable income for those kinds of contributions. This is purely talking about federal tax, not necessarily state tax, but many states follow federal.
So let's say I'm a Canadian. I'm 40 years old. I've got this incredible opportunity to go down to the States. I'm being sponsored through a visa. And I come to you and I'm telling you I'm moving in 12 months. What can you tell me that I should be doing? And I do plan to live in the States, this person that I'm creating. I plan to live in the United States for the next 20 plus years. Take me through that process of what it looks like to prepare me in the best possible way to get my house in order so I can live down in the United States for the next 20 years and avoid taxation and double taxation, all this other stuff.
This is this is I don't have to imagine very hard, because I've had many clients literally walk into me with exactly this question. And my approach to this is kind of the same every time. I walk through every single asset they have and create a plan for every one of them, every material asset. But no, really every asset. It's just that I might lump all of their like random personal assets in one category as random personal assets, such as like toothbrush, clothes, those kinds of things. Um, but like every single asset, I have we kind of create a plan for it. And like in each if and it's hard to give generalizations as to what is done with each item, because again, even in regards to that RRSPs, there's a number of different answers. One is you just keep it there. Two is you move it to a different provider. Three is that you take it out before you leave. Four is that you take it out after you leave. Five, or like just after you leave. Six is like keep it and then take it out way later in retirement. Like, so there, with that one item, I came up with like five or six different things that you could do with an RRSP, and each one of them could be the legitimate choice depending upon all of the particular facts and circumstances of the person, and
Okay, so
what their cash needs are, what they're like. If they're going to buy a house, well, they have a need for a pile of money, and maybe liquidating their RSP is the most convenient way of financing that.
one of the things that we tell these people when they do go down to the States is if you do plan to go home, and this is more of an immigration, you've got your green card, um, keep us involved the entire way because getting your citizenship and then coming back to Canada, boy, you've complicated things.
Yes, I mean that's you're talking about issues I talk about super regularly with my clients, and that is always a question that I'm asking right up front is they're asking about their immigration situation, and there's actually been a few that have like come to me and are prepared to talk about like this like thing about moving to the States, and then I ask them about what their visa is, and they look at me with this blank stare. I'm like, well, I'm a Canadian. I can just go to the States. And I'm just like, you need to talk with an immigration lawyer.
Yeah.
Um,
Well, I
so
think it,
I have had a couple meetings where they came to me probably in a little bit of the wrong order, but anyways, so yes, the immigration issues are just so important because I mean, like, the, yeah, you do not want to be caught on the wrong side of the immigration issues, because you could well, you could theoretically go to jail, but I mean, more likely you could be barred from the States for life.
well, we had a great podcast a couple of weeks ago with a fellow named Alex Marino from Moody Immigration, and he does more renouncing of American
Mm,
citizens than anybody on the planet. And I'll have to tell you that it's just very, very interesting. It just cleans things up. I'm not saying that I'm for an American renouncing if they're moving to Canada or I'm against it. Every situation is different. But I have to tell you that the information that I got from Alex was it's very educational. And to have the opportunity to spend 30 minutes and just ask all these questions and not get the big bill, I'm very grateful that we were able to share Alex with the rest of the people out there.
Oh, that's fantastic for all the viewers of this podcast. That is such valuable advice. Being able to just kind of get like the all that high level information about the renunciation process and its implications and whatnot. Yeah, no, I'm asked all the time about those things. Of course, I'm talking about like the tax consequences and the ways about coming into compliance with tax issues in relation to the renunciation, as opposed to kind of the more legal effects and all those kinds of things. But yes, it's such an interesting topic.
Well, here's the other thing that we tell people that everybody always starts with a dream or a fantasy, and maybe they come to Maui for the very first time when they're 22 or 23 or 40 years old, and they say they want to live here. And I'll tell you, I don't want to be a dream killer, but when you go through the process and you're talking to a Trent or you're talking to an Alex Marino, or maybe an immigration lawyer that's going to get you a visa or an E2 visa to be able to live in the United States from a compliance point of view correctly. And there's a lot to it. And I think this is what this whole idea of this podcast is to introduce people like Trent, like people like Alex Marino or Oliver Branch, or some of the other great partners we have across the country, because there is so much to this cross border. When you go across with your mom and dad and you're in the back of the car, it seems so damn easy. But when you start to drive the car, later in life, yeah, there's a lot to it. Now, a few other things that I have for you is that what else are you seeing from your guys' firm on this cross-border issue that's really coming to your mind that is a common mistake or something that's being taken for granted by either a snowbird heading down south and a an American moving up? And I just had another thought that popped in my head that we were talking to a very good friend of mine who's a realtor in Maui here, and we were talking about, is it called the 131 the 131 rollover or exclusion? Let me see. I've got it in my book here. I want to say it's called I'm pretty sure um, it's called
Oh, the exchange,
yeah, the
real
rollover,
property exchange.
yeah, 1031, I think it is.
Yeah,
Yes.
1031. Yeah.
So in United States, they have this great strategy. If you have this rental property or this piece of real estate in Maui and you want to sell it, you can exchange it for equal or a greater value, and you get to defer your capital gains.
Mhm.
And it's a great strategy. I think there's other taxes. It works. It works for an American.
Mhm.
But talk about the double taxation of the 1031 rollover, and does not work for Canadians. And have
That's
you seen Americans trying to use that? Are you familiar with it?
I know I'm familiar with it, but practically, my practice is effectively entirely Canadians that have US stuff. And because it doesn't work for Canada, I don't actually do it because it doesn't work in Canada at all. Um, the so Canada, just to be, I want to back up 1 second and say that Canada actually does have a rule that is in principle similar, but it explicitly carves out any and all rental properties in all circumstances. And so when people are talking about it, it's almost inevitably in that kind of rental property context, and it absolutely does not work in that kind of a context. But
Yeah.
for other types of business property, Canada does actually have a similar rule. The whole trick to it is that if you are like a dual resident, so U.S. citizen living in Canada or resident in Canada, um, in order to make these kinds of things work, it's essential that your transaction has to comply with both laws at the exact same time. And so, and the laws are designed differently. And so, like, I've ran into some situations, maybe not in this exact place, but like where the laws are intending to do the same thing or generally the same, but it is actually literally impossible to comply with both in a given fact pattern. Um, and so there can be such kind of traps of trying to be a resident of both effectively paying tax or worldwide income in both countries.
Well, and once again, the point to be made is that if you don't understand US tax, Canadian tax, be careful where you're going to get your advice from, because this 1031 rollover can be very, very dangerous. Because let's say, for example, they got away with doing it, they're trapping a capital gain on the US side and they're paying a capital gain on the Canadian side. So try and unwind that situation. So our point is that be careful where the information comes from. People are not trying to hurt you with their lack of knowledge. They just can be, sadly, they just don't know the whole figure. And then when they do get advice, they might ask a person, an accountant in United States, and say, hey, does this work? The accountant on the US side might say it works, but they didn't realize it was a Canadian resident. So
Hmm.
I think, once again, people aren't wrong. It's just they don't have all the information. And once again, I'm going to beat your drum and tell you that make sure you're getting advice from the right people that are involved in the cross-border space. So before I let you get back to your busy afternoon, or in this case, it's got to be, is it 3:30? It's
Yes,
3:30 right
3:30.
now? 3:30. What else is happening with your firm, and how can people get a hold of you?
Sure. So I mean, our firm's located in Saskatoon, but I have clients all over the place. Um, and realistically, the best way to get in touch with me would be to send me an email. My email, I'm sure he'll be able to post it, but it's trobinson@bblp.ca, and then you can contact our office line at 306-657-8999, or go to our website, bblp.ca. And through any of those ways, you'd be able to just get in contact with me. I'll really the next step there would be to almost my first step in any case is to basically have a startup meeting to just kind of figure out what actually you really need. Because in many cases, people have said that they need something and they don't. And so some situations, I have had some situations where people think they have a mess of a situation, and I basically am able to have a half-hour meeting with them, and they have an answer and don't have a mess. So obviously that's not all cases, but like really having a chat is oftentimes with someone knowledgeable about the situation is going to will give you comfort and will just like save you so much time and worry. And then you can get what the real answer is, as opposed to just looking at non-personalized information.
That's great. Well, I have to say that I've met a lot of people from Saskatchewan, and there isn't one person that I've ever have not gotten along well with. So, on that note, I really appreciate you being on the on our show today, sharing all your wisdom. And I remind everybody the world is small and be kind to all. And I think that's probably that might even be embroidered on the your provincial flag somewhere, because we are very, very as much as we love all the people in British Columbia and we believe that we're friendly. I think that Saskatchewan is right up there, if not, if we're number two, Saskatchewan will be the number one. So I appreciate your time. Thank you very
Thanks so
much, and
much,
we look
Gerry.
forward to working
This
together.
is just fantastic to have this chat, and I hope that we can have another chat sometime soon.
You're on the list. Okay, all the best.
Okay, talk to you later. Bye bye.